Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday. Going into a long weekend, 3-day weekend, 4th of July weekend. So fun for the kids, terrifying for the pets. And looks like the weather's going to hold here in South Florida. So it should be a good time. We know that the markets are going to be closed Monday. We're also going into non-farm payroll on Friday of next week. So not today. So Friday next week. And this means that we've got Powell, we've got PCE, next is jobs. And as we go from stepping stone to stepping stone of the main growth, inflation, and jobs data releases, we will continue to get more and more kind of reflection of that data, then fueling the way in which the Federal Reserve is going to communicate their monetary policy and the trajectory on rates, which, by the way, with yesterday's PCE, which we live traded right here on the Simpler Trading YouTube channel, that told us what? Well, major economic event. Check. Did it show, according to the Federal Reserve's favorite inflation gauge, that inflation is flattening out? That it did as well. That's not enough, though. Then we map that forward to understanding what's happening with expectations on rates. We got clarity on that as well, which means we are not only seeing a higher probability of 1/4 point less hike, we're also seeing a slower trajectory of hikes. And that's the way the market responded to an important economic event. Not all events are important, gang. Just like if you are a stock trader, not all earnings are really a big deal to the broader averages. Some are, some aren't. Some are more impactful to an individual sector or ETF. Some are more impactful to an index, but they're not all equally important in terms of their weighting. So the same is equally true for the way in which we understand what's happening with economic data releases. They're just not all equally important. So we got to know which ones to watch. And that's really the takeaway from this week as we go into, again, that 3-day weekend. As always, though, gang, our show is about your questions. So let us get to them. All right, first up. Hey there, Mark. Ollie, sure. OLLI. Discount store, pullback on double green structure. All right, let's see what we have here. So looking at the year, just to get an idea of what we've seen so far, double green, propulsion dots, north of the 200 exponential. The pullback we're getting right now is to the 13, which I would consider really aggressive. Not having a lot of experience, I don't trade Ollie on a regular basis, but it doesn't take a lot to look at the way in which price action is separated from the wave and say, yeah, this market's accelerated, it's parabolic. The 13 exponential, the yellow dots you see on that chart, could be an interesting support level. Ideally, we start at the 21 or even the 200 that's sitting down there, or the wave. The wave is my main reversion to the mean. Mean, wave, in the context of a trend, that's absolutely synonymous for me. So aggro pullback, I'm good with that. That's fine. That's valid. Sure. All right. Next up, GM. All right. GM was halted for a news announcement this morning. Okay. What do we expect from this? Battlehawk, I'm not following the news on GM, although, clearly it would be pretty easy just to Google that and see what the expected conversation is. I mean, probably CNBC is running something like that right now, which this is where TV is mildly helpful as opposed to being mostly entertainment. I think let's see. Let's do this. I'm going to just search GM. I'm going to go take a look at the news. And hmm, the only thing I keep seeing 2 hours ago is GM is making 12 electric Hummers a day. That's anemic. They've got 77,000 orders. Yeah, that's going to take a minute to fulfill. I don't see preparing a strike, but that's about a day old. UAW reaches a deal with the GM subsidiary at the strike in Michigan. I don't really see anything in light of that. So I don't want to guess, right? We don't want to predict. We want to focus on process. Here's what I do know, regardless of what it is. Uh, let's play out the probabilities. Let's think about possible moves and whether or not those moves are useful. GM's in a downtrend. The news has really nothing to do with the structure. Today's news has nothing to do with the bigger structure. If GM moves lower, nothing for me to do. If GM on whatever this is, and this is what's so great, you don't need to know the news, right? It's cool to know there's a catalyst for volatility. How do we take advantage of that volatility? If it moves higher into the wave, that's a reversion to the mean, right? Downtrend, sell the rip. In that case, that becomes relatively useful. If we end up at 35, 36, then let's see what that news actually is and whether or not it might take a day or two to settle down. But that's really the plan there. So the news might be the catalyst, but I don't want to ever go into expectations of anything other than we're probably going to see some volatility. That's playing probabilities. That's avoiding prediction. And I certainly don't want to get now, somehow positioning myself in a way that I am going to guess on what this news result may be. I never want to guess at the result. I always want to use the volatility of the result. It doesn't matter if it's earnings, doesn't matter if it's data. Those of you that watch me trade the PCE, did we go in before the PCE or after? After. So I always want to use the news. I don't want to guess. So yeah, it could be an interesting move. Yeah, it could be an interesting one. All right, ZB, Elvis, absolutely on my mind, that long bond, TLT, ZB. We continue to see some strength here. This is frustrating for me. I'll be straight up because I'm looking for opportunities to take advantage of just an overreaction to some of the PCE data. Hasn't stopped yet. Now, granted, it's 21 minutes or 23 minutes before the open, but this is not the direction I want this ZB or TLT to be moving in. So this will be frustrating because I will get a small gap up. We'll get a pretty decent little gap up in TLT. That said, where are we going to open on TLT here? Yeah, 116. So when I look at TLT this morning, I'm going to wait till 10 o'clock to make any decisions about cutting TLT loose. And TLT will now have transitioned from a downtrend not to an uptrend, but rather a broken downtrend is now chop. And now within the context of chop, what I'll be doing, now remember, I don't trade, if for those of you who don't know, I'm not going to look at TLT through TLT. I'm going to look at ZB to understand TLT. And then when I do want to buy a put, which is still the goal, by the way, when I do want to buy a put, at that point, what I'll do is focus on an overbought. So this is resistance. There we go. I want to focus on an overbought resistance level. So that Darvis there is also resistance. I can make a note to myself. I can make a quick note to myself that is Darvis resistance. And I don't know how many folks use the ability to label the horizontal lines, and if you notice, I don't draw trend lines. It's always horizontal support and resistance. So I will call it my Darvis 2.0 resistance. And I'll even go so far as to call it overbought Darvis 2.0 resistance. Oh, it's too long? Okay, how about Darvis? There we go, resistance. So that's what I'll do. And if you want to start labeling your levels, probably a really good habit, because sometimes we forget why we drew something somewhere, especially when we're looking at dozens and dozens and dozens of symbols. So that's what I would do, Elvis, with ZB. And then ZB is going to map to potentially TLT. But it is going to be a frustrating morning for us bears in the context of a trend. We'll have to shift to managing risk and focusing on a potential overbought short, if anything at all, because as the market, as we talked about at the onset of the show, is digesting what that PCE, flattening PCE move means, what the expectation for maybe 1/4 point less rate hike and a slower trajectory, that's all fairly bullish to equities, generally speaking. And it's actually bullish to bonds, meaning bearish to rates. And this is where understanding rate of change, macroeconomics, makes a huge difference, as opposed to sort of telling stories and narratives about, front running the Fed or guessing at what's happening, trying to front run the data, which is just generally a very bad idea. We waited for the data. Now we know it's a toppy market. And that's when we're going to start to see some of the, sentiment and momentum start to shift, which I think we are seeing. But we only know that after we see the data for sure. Remember, front running the data is what got traders to buy at, say, 142, which you might say, Rog, we're almost right back up there. Sure. But that also meant we had to sit through a 10-handle sell-off, more than a 10-handle sell-off, to get back to even. How many traders can do that? It sounds clever to say we're heading higher without acknowledging the risk, the sort of scenic route sometimes the market takes to get back on track. And that's where a lot of times sort of predictive analysis is not real world analysis. And, stand guard at the gate of your mind. And even when I'm talking about analysis, ask yourself, is this predictive, or is this sort of reactive to what we're seeing and what we have now, right? And I think a lot of times you're going to notice just how much predictive, this is where the market's going, hypothesis type analysis you'll see out there, sadly. Okay. Next up is Frank. Mary is leading. Here's what we know about GM. Mary is leading the way. Okay. Moving on. Yeah, maybe. I don't know, Frank. I'm just looking at the news. Let's see. 3 months. Okay. So cool. So gang, again, whatever it may be, maybe now they have a hovercraft Corvette. Don't know. Let's wait for the reaction on the price action. And then, whatever it may be, we can then start to see if whether or not where price is useful. Whether or not where price is a trade. So we'll see what happens. Thoughts on rates? I think we kind of covered that, Sherry, as far as what the CPE meant. So same idea with bonds. It looks like we're going to get probably a 1/4 point less rate hike. Yeah. Okay, moving on to our next question. Pepsi and Coke. All right. Two consumer items, two consumer stocks, heavily weighted. Now, heavily weighted where? Well, let me show you here. There we go. Crack open that XLP. Here's your consumer discretionary. I always want to compare what's happening broadly in the sector, in this case, the ETF XOP, and what's happening within it. Archer Daniel Midland, downtrend. Mo, downtrend. Walmart, downtrend. Your most bullish charts on this screen are going to have a combination of at least a neutral trend and north of the 200 propulsion. That's going to be ideally what we see. That's not always going to be the case. But on this particular chart and on these particular stocks, right, compared to one another, the most bullish names are going to be neutral trend north of the 200. And I like consumer staples if we continue to see weakness in equities, but really we haven't seen sector rotation where defensives have benefited. So be careful, because we've seen broad risk appetite. We've seen broad risk aversion, not say XLK moving downward while XLP or XLU are moving higher. We're just not seeing that kind of give take. So that's what I would do with KO and PEP, know where they are within the context. Both of them are just insanely choppy. And I don't want to venture into names that are in chop unless they're at the upper or lower extreme. And ideally, in the case of, say, Coke, the previous trend was up. I will have a bullish bias, which means I'll favor the lower extreme. Hope that makes sense. Is the market trying to price in a recession? Rick, the market's going to price in whatever these chucklehead economists are going to ramble on about constantly on television. We're going to be inundated with it. I'll tell you this. Anyone who's moving around size, meaning portfolio managers moving around significant amount of size, funds, they've already thought about this. And I assure you this, only from experience. Can't account for everybody, but they don't give a rip. They really don't. They really don't. They're looking past it. So pricing in and looking past, probably the same thing. So yeah, I think we're looking past it. But the only place we're going to continue to be hammered with this is financial television, right? Financial television, and I think a lot of you know, I loathe it. I loathe it. I've been on it. I've been interviewed for shows on it to try to get a gig. And, I thought that's what you do when you're a trader. All right, you trade, and then eventually you get a gig on financial television. Have I ever told you all my my fast money story? I did an interview years ago with one of my trading heroes. Still is one of my trading heroes, but now I know her, Linda Raghee. And I guess Fast Money folks contacted her and said, would you be interested in interviewing for the show? They wanted a woman on the show. And she said no. I mean, why would she? Really? I mean, she's an amazingly successful trader. But she recommended me, which was way more flattering than anyone from CNBC calling me. Although I did enjoy the show. And of all the shows on that program, that's about the only one that I'll watch. So I'm flattered, right? It feeds the ego. Funny enough, feeding the ego does not feed the bank account. Nonetheless, this was probably over 10 years ago. I was in my early 40s. I thought it was what was next. All right. And I went to New York. I did all the testing and stuff. Obviously, I'm still here. It wasn't a fit. And they're right. I'm not a fit. I wasn't a fit. I was flattered as heck that Linda Raghee even remembered and thought of me. And then, to go up there and see the process, it was impressive. They work really hard to put on financial entertainment. They really do. They work really hard. It's admirable. These people have it, the organization is, but it's financial entertainment. Let's face it. So went through the whole process, and then it dawned on me. I talked to my trading buddies. Nobody who's trading watches CNBC. Not really. And the ones who do go on there are kind of jerks. I mean, if you're going to go on the station, at least be respectful. But sometimes they're really kind of jerks about it. So yeah, there's my show. There's the whole story. But ultimately, the funny thing is, in terms of the psychology of that programming, gang, this is the most watched show is one where someone's going to give trade ideas in a moment's notice in the lightning round. Really? He's a fantastic personality, but come on, really, the lightning round? So remember where we're hearing about this conversation and recessions and it's financial entertainment, right? Anyway, and I digress. D, what I would watch here on D, Jan, watch the 200. Let's wait for it to pick a side. Always about probabilities. The probabilistic thinking south of the 200 is a little bit more bearish. North of the 200 becomes increasingly bullish. All right. Okay. What about crude oil? Sure. Let's take a look. Love looking at some commodities. Look at the trend that was. Look at the trend that is. Uptrend has gone into chop. Not the first time we've done it this year. So uptrend to chop. Do I want to be bearish on crude? I do not. But I have to think about this as not a trend following approach, but rather an oversold buy approach, right? I don't want to think about this as something that's going to continue to buy the dip. See, this is where buy the dip gets a bad name. Buy the dip is only valid in uptrends. It's not valid in chop. A dip, I don't believe, is valid outside of an uptrend. Just as a rip, short the rip is not valid outside of a downtrend. It's chop. And so in that regard, now I have to change my tools. Now I have to change my strategy because structure dictates strategy. Strategy dictates indicators. We stick with process. Because as I like to remind myself, I may not know where the market is going moment to moment, day to day, month to month, year to year. I guess someone with a crystal ball would know that. But I can play out the possibilities and I can look at the highest probability zone for a setup. And that's our job. I think too many of us think we have to know where a market is going rather than knowing once it's got to whatever price it's reached, is that useful for us? Is that a reaction level for us? Remember, that's not what you're going to hear in just about most analysis about the markets. Definitely not on television, right? So remember, when you're listening to something, stand guard at the gate of your mind. Even in this show, right? Maybe I'm over caffeinated one day and I've had a really great string of trades and I lose my mind. Reel me in. Process over prediction, right? We can look at possibilities and we can look at the highest probability possibility, and that is our job while managing risk. Thanks as always for being a part of Charts and Coffee. I appreciate the questions. I appreciate you all learning about trading, taking the time to educate yourself. And this is, I think, an amazing game we play. And gang, trading is a game. There's winners, there's losers, there's rules, there's points, right? Treat it as a professional athlete would, right? You're a mental athlete. You have rules, you have training, you have game day, you got to rest sometimes. I think if you treat it as an athlete would, you're going to do a whole lot better. Funny enough, so much of trading psychology either comes from game theory or sort of gambling, or it comes from sports psychology. And let's adopt those. Adopt those mindsets. Let's make our own decisions because nobody cares more about your money than you do. Don't let other people make decisions for you. Don't let other people make you think you can't learn this. And don't let other people think they know where the market is going and you don't. Don't let people do that. All right, gang. Thanks as always for being a part of the show. Caffeinate and dominate. Be good to each other. Enjoy the long weekend. Yes, I will be doing a Charts and Coffee on Monday. It's Independence Day. How can that be a better day to sit down and look at some charts before the fireworks go off? So I will see you all on Monday. All right. Until then.